guys, welcome to the first video in the Orderflow series. This one is going to talk about the very basics of Orderflow, and we will do this with the help of a Delta cluster chart like this one. Okay, so let's get started with the very basics of it all. These charts might look a bit confusing to you in the beginning when you are new to them, because there's some extra information in them that normal candles don't have. One thing that you will see is though that on the left hand side of each candle you can find these normal candles essentially. So if you go in here like this, we see here this one is a green candle, or it's blue in this case, but we have like blue and red here. Essentially this is like the candle open, this is the candle close, and this here is the wick in thin. Same here, you have the candle open in a red candle, the high, the low, and the close here. So this is nothing really new. Now, what else is there? Of course, we see that there's like in these candles, there's a shaded area and a highlighted area. And what these are is essentially the two parts of any candle or any composite is the value area and the non-value area. So the value area is the area where 68% or 70% for some of all the volume has been traded. So this is the kind of important volume heavy area of each candle. And the rest of the candle is of course also there, but it's not so important for us. Now, we also see numbers in each of these candles. And what these are essentially the market buys and the market sells. So on the, let's take this one for example, right? We have the market sells on the left side. So on the left side, like there's this middle line where that separates the whole thing. On the left side, these are market sells. On the right side, these are market buys. Now, knowing that, that's good. We will get to that when we're looking at trapped value areas. Here is the point of control, right? The yellow surrounded box, in this case, 100 ticks, is the point of control at this point here. So in these, on this level here, there's been the most traded volume out of the whole candle. Now, that's it pretty much for the candles themselves. So now we understand what exactly happens. Now, again, so much to the candles themselves. We will get back to them in a bit. We can see the top right here. We're using Excel charts, by the way. There's a few different things that we can turn on here at the bottom next to the normal chart. Indicators, essentially. So we have delta bars, which is delta. Now, delta is a very key element that we use in our daily trading all the time. Delta is the difference between market buys and market sells at any given point, level, candle, stuff like that. So delta shows you the difference between aggressive participants. Aggressive participants are market buyers, sellers. Never limits. You cannot see limits here. Now, if the delta of any candle is positive, so green in that case, this means that there have been more market buyers than market sellers. Also, the other way around, if there is a red delta for any candle, like this one here for example, there have been more market sellers than market buyers. So you can take this like, well, essentially have there been more of either side, and you can see like which direction the majority of the people have traded. On its own, this is not really useful. there is delta divergences that we will cover in another video. It's super useful though if we combine it with open interest. Open interest here, it shows you the change in amount of open contracts in the market from the beginning of the candle to the end of the candle. So if the open interest is positive, so blue, green, there have been an increase in positions. One important thing with open interest is that it does not differentiate between long or short. So whether this open interest is going up, there's like no indication from that whether these people, the new positions here, are longs or shorts. For that, we use the combination of both open interest and delta. So if we have an increase in open interest, like here, for example, this one here, this candle had an increase in open interest, but the delta was negative. What this means is that there have been new shorts here. Increase in open interest means new positions, actual new positions. Now, together with the delta, from this we can deduce that these are new shorts. Essentially here, it's like a very small increase, but still green increase in open interest. So new positions and green delta means that here have been more longs opening than shorts opening. Okay, so much for that. Now to the most important bit, in my opinion, of it all, is the footprint bar statistics. Sounds complicated. It's not really complicated when you look at it. So it looks like just a bunch of numbers when you have it like this, right? Can be a bit confusing. Also the coloring, the shading, whatever. With these settings that you will get when you use the workspace that we provide you with in Wave, you will have not everything in like a bright color, but only like increases compared to the rest in a colored shaded way. So stuff that's like not really standing out has a very dark shade, if any color at all, and the ones that stand out, that do stand out, they have a color in the background. So you can see kind of not exactly how many shorts have been like closed or longs have been closed, whatever, in the liquidations, for example, because you can't really go by any real number here. But as soon as this blinks up, you know that there has been this check mark triggered, kind of. So this is not only for liquidations, but only also for everything else, except delta minimum and delta max here. Because for this we do want to look at the numbers. We'll get to that now. So we have here the delta bars. We also have the delta here in numbers. So for each of these, we have the, like on the first glance, we know that this has been like a delta bar, a negative delta bar. Here we know how much. Now, in these two rows, we have the delta max and the delta minimum. And the way you should imagine this and why this is useful is that it's kind of built like a normal candle. So we have the final delta, the delta that stands here, second row. This is the final delta. This is the delta, so the difference in market buys and market shorts at the end, close of the candle. But of course we know that price and delta and stuff like this changes over time. And it's very important that we know how it changes over time. So let's take this particular candle as an example, right? We have a final delta of negative 5.8. And this is not too much if we just look at it like this. But the important bit here is that we can see that during the course of the candle, like between the candle open and the candle close, there's been an up move here in this very candle, and there's been a positive delta of 22.8 million. So we know that there's been a difference between the delta and the delta max of almost 30 million. So this is significant really for us because we can trade off of that. We'll get more detail on this in the trapped value area setup that we will cover next. It's the most frequent used setup that we use really for any trades. Now, one thing I also wanted to show you was the features here, the other features here, which are net longs and net shorts. Essentially, they do what we just did before. So let's just have one turn on, net shorts. We have here an open interest decrease and positive delta, which means that there have been shorts closing. We know this because the open interest decreasing means positions are closing and the delta is positive. So the only position that closes with a buy order are shorts. So essentially what we can read from this here, net shorts, we can also read from the combination of these two. Essentially from this here we can see net shorts have absolutely drastically decreased here on this one. Same as net longs. In this candle here, there's decrease in open interest positions closing and negative delta, so heavy market sells. We know that the only position that closes with a market sell is a buy, a long. So from this here, we can read from the delta part in the open interest that there have been longs that closed out, premature longs, we can say actually, that have closed out, and we can also see this here. I usually don't keep this on because, again, I can read it from these two, and I can read more stuff from this. If you want, you can keep this on. I just like to have some more screen real estate and to turn it off. Now, the next thing I wanted to show are the T sizes. And this is a bit confusing. Essentially, these are split into some categories of market order sizes. Over 62k, 32, 62k, and 12 to 30k, and then 6k. Now, this is just to see like if the big wallets are doing something or the smaller wallets are doing something. Now, imbalances are something interesting as well. I don't use them here. I will explain this with the session template. Stacked imbalances are super helpful, super nice. So yeah. Also here, VWAP, of course, volume weighted average price. This is for each session here, or actually for each day, never mind. For each day, this is a new one. So we have here a look back for 3 days. So these are 3 days and each daily VWAP. In the VWAP, we can also show naked VWAPs, which is pretty nice. So we can see the naked VWAPs here. They offer mostly, especially on weekdays, some nice reactions. And yeah, that's that. But yeah, this has already touched upon a topic that, as I said, we're gonna look at in the next video. These are just the very basics that we want to cover here in this one. So we have covered the candles, how themselves, like how they are built, with the numbers inside, the point of control, the value area. We have covered the open interest, the delta, and the footprint bar statistics. We didn't cover the top row, this is just volume. I'll get more in detail how we use this in the next video as well, because there's something that we need to have in the back of our mind with it. But yeah, these are the basic charts. Delta cluster chart, this is the setup or the basics, the foundation, I guess, for many of our setups that we use to actually execute on trades. So yeah, this is it. Hope you enjoyed this little one. Talk to you soon.